Hello, everyone. Welcome back. My name is C.R. Tallene. You are here with us live every Wednesday, 11 a.m. Central Time, as we talk about retirement. And I have a real special treat for you today. I've got Joe Scroy and Tim Kelly with us today. Welcome, guys. I'm glad you're here with us.
Yes, glad to be here. Thank you.
Good to be here. Thank you, CR.
We're so excited as we've been working on these expert webinar series where we focus on particular areas of interest. And one of those areas that we talk about are with your company and Strategic Alliance Wealth Group. And we're very, very excited to have you with us. In fact, we just did a really great webinar a few weeks back, and we just had the opportunity to bring you both in. And I'd love to hear from you and tell us a little bit about what you do before we get started.
Sure. Well, our company, Strategic Alliance Wealth Group, specializes in working with affluent clients, with advisors and CPAs and different type of individuals that have the high net worth clients. We've been doing this for 21 years as our specialty, and our focus is premium finance. It's a very hot topic with taxes, being uncertain, and people looking to accumulate more wealth, and do so with maybe reducing volatility. So this is really our niche that we focus on. This is the expertise we bring to the table, this is something. Again, the timeliness of this is very, very prevalent in today's environment.
And again, as we're always here talking about retirements, we want to help everyone know how much this ties into the retirement space, and to help people understand how important this is.
Sure, absolutely. Joe?
Yeah, definitely. And when it comes to premium financing, again, when we talk about the expert webinar series, this is our specialty. This is all we do. We don't do taxes. We don't do legal advice. We don't manage assets. All we do is premium financing. And so when you're dealing with a strategy like this, it really is crucial that you're with someone who is an expert in this strategy, because it is such a niche strategy. And again, the benefits to the client can be significant in retirement. And so it is a hot topic in the industry right now. There are a lot of people out there who say that they can do it, but you really want to make sure you're with someone who knows how to actually process and structure it correctly. And that's what we pride ourselves in doing, differentiating ourselves from some of the other newcomers that have come into the industry saying, they can do it, but, we do this all day, every day. And, we see a lot of stuff out there, and so we try to cut through the smoke and tell everyone, what's what, and we design these things properly.
And that's why you're here, and we appreciate that so much. All right, and we want to welcome everybody that is with us live today. Thank you for being here. And those watching on replay, we love that you continually join us every week as we break down and talk about topics in retirement. All right, fellas, so what we're going to do is we're going to start by throwing out a bunch of questions. We had a lot of people join that webinar, and what we did is we pulled a lot of the questions from that webinar. Not all of those got answered, so I'm going to kind of throw a bunch of questions at you, and I want to invite you watching us live to go ahead and submit your questions. And so if we have time, we'll take a break and switch back over from our live questions to those we have already curated here. So if you guys are ready, I'm going to love to get started and throw some questions at you.
All right, let's do it. Absolutely.
Okay. So let's get to my first question here. Let's see if I can get it on the screen. All right. James is asking, how can the loan balance be less than the finance premium?
All right. So with this question, again, in the presentation, we did have a spreadsheet up that everyone was able to view. And the question is, how can the loan balance be less than the finance premium? And the easiest way to answer that is because in these programs, we're simply paying more than full interest. So let's say you have a loan of $100,000, just hypothetical example. Let's say the interest rate is 3%. So the interest payment on that would be $3,000. But if you were to pay $5,000, your ending loan balance would be $98,000 on a $100,000 loan. So in these programs, there are a couple of different ways that they can be structured. You can pay a partial interest payment, and you can accrue the rest of the interest and roll it into the loan. You can pay a full interest payment, which is just like in the example. You have a $100,000 loan balance. Your loan rate is 3%. You pay $3,000. But what we like to do, where we differentiate ourselves to make our programs more conservative, is we show a levelized interest payment, but for the majority of the loan, that payment is going to be paying down interest plus principal. So for example, the way we like to structure ours, if the loan rate is 3%, we'll show the client making roughly a 10% interest contribution. So it covers the interest portion. and it's taking care of principal as well. So if it's $1 million loan balance, we like the client to at least put in about $100,000, regardless of what the loan rate is, because we want to have that loan rate as low as possible when we go to pay it back from the policy.
And if you are here with us live and if you have a premium finance question, again, go ahead and throw that in the comments and let us know, and we'll be able to take a break here and get on to other questions here. But before we get on to our next question, I appreciate you answering that one for us, Joe. Joe and Tim, tell us a little bit about yourself before we dive into the next series for those joining us so they can get an idea of who you each are as well.
Sure. I'm the CEO and founder of Strategic Alliance Wealth Group. Been in the industry for 41 years. This June will be, and built everything from a retail operation to where we had 46 advisors, and we were the independents between the Merrill Lynch and Morgan Stanley in the Tampa Bay area. We focus really with working with, again, high net worth clientele, business owners especially, again, doing wealth accumulation strategies that involve, in this particular thing, premium finance. But in the past, the history has been really working in the estate planning arena, the retirement planning, income arena. And again, how do we do that with products and strategies that are designed for that?
And I'm Joe Scroy. I am a partner here at Strategic Alliance Wealth Group. I have 8 years experience in the industry, all of it solely dedicated to premium finance. So I started on the analytics and case design desk, designing programs, analyzing products, from the ground up. I worked on the internal desk as well, where I worked with and coached advisors and financial professionals on premium financing. And I've also sat at the point of sale and retail as well, dealing with the end retail client. So 8 years experience, all dedicated to premium finance. And I just want to take a minute to thank everyone for showing up, whether this is your first time here or whether you were on our original webinar and you decided to come back. We really appreciate you showing up today.
Absolutely.
Yeah, thank you so much. And we'll talk a little bit more. Let's dive into our next question here, though. So Steve is saying, are there any 10-year loans available?
Well, when it comes to the loan, we don't have any that are out there for 10 years. You'll see a lot of times, if you saw in the webinar that we did, where a lot of times they're illustrated that way, but it's incorrectly done so. And that's one of the things that we look for, if we're analyzing someone else's premium finance module. There is no 10-year loan that we're aware of that we have in ours. We do have a 5-year that they can fix it in and lock in for 5 years and then renew each year, each 5-year period thereafter, so that loan rate can stay fixed. And there's a variety of other types of loans that are available in the marketplace, where they can go annually, or we could, again, lock it in for a 5-year period. Any other comment on that, Joe?
Yeah, sure. And just to add off of that again, in my 8 years experience, you are not going to find a 10-year loan agreement for this program. Generally speaking, if we're talking about a fixed rate, they're going to be done maximum of 5-year agreements. So kind of, if you sat on our original webinar, something to look out for out there. So if they only are producing loan agreements that are fixed for 5 years, but you see an illustration or a proposal where the loan rate looks like it's locked in for 7, 10, sometimes we even see them where they're locked in for 15 or 20 years, that's not true. And that in the future, you're putting yourself at risk for higher loan rates. Because let's say, for example, we get a loan at 3.5% right now, locked in for 5 years, and we project loan rates are going to stay at 3.5% for the next 20 years, right? What happens if loan rates go to 4%, 4.5%, 5%? When we get down there, that increase in the interest rate is going to swell that loan balance, and your loan balance is going to be significantly higher than what you originally illustrated. So what we always show is that loan rate increasing each year. But if you see a fixed rate for more than 5 years, it should be a red flag in a premium finance proposal.
Absolutely.
And what if we do find somebody that comes on and says, hey, Joe and Tim, I do have somebody that this loan rate, it's like you said, 10 or even 15 years. What do you think what's the next step for them to do? Because I feel like that's something that we need to talk about.
I think, we would take a look at that illustration and so forth, and we would find out, who the lender is or where are they being able to get that kind of a rate. because again, showing it on an illustration and making assumptions or actually having a contractual arrangement with the lenders is two different things. And as we see all the time, if people do come up with illustrations to make them look good, but you don't want to put your client in that situation. And that's why we will analyze it. We will go back, we'll research, we'll find out who the lender is, and then we can, verify if in fact that's true. We've never seen it yet though, where it's been locked in for 10 years.
Right. So if anyone on this call does happen to have a premium finance proposal that comes across their desk, we're more than happy. Just take a second set of eyes, look at it, make sure everything checks out on there. We frequently do have advisors or CPAs come to us and say, hey, my client was proposed this. I've heard of this strategy, but I don't know much about it. I want to go to the expert and make sure, everything on here makes sense, just because, even though I know about it, I don't know the ins and the outs. So we welcome you. Please just shoot it over. We're more than happy to have a quick conversation and just look at it from a consultative manner.
Right. And if it's something that's good, we'll verify that it's good. We do that. And every now and then we run across something that may seem to not be good, but we actually do verify, and we'll say, it's not a bad recommendation for the client based on the circumstance. So we'll on both sides let you know if it's something that you need to be more aware of, or something that we could say it's probably a pretty good program for them.
And I appreciate you saying that, because I think in this industry, having that second set of eyes always at least makes you feel good. I mean, we're in the industry right now. Even if you're buying a blender on Amazon, you're going to read 200 reviews before you buy it. But then again, in other cases like this, somebody may take somebody's word and say, hey, great, I'm ready to go. But what you're saying is, hey, let's spend a little extra time in looking at this, because again, if you're going to spend, countless hours reviewing a blender and the reviews on that, then we definitely have to be able to work through this a little bit better.
Yeah, right. Absolutely. Yep.
All right. Well, let's get to my next question here from Jay. Which carriers seem to be the best fit from a product standpoint?
Well, again, we shop all the carriers that are out there in the premium finance space, the ones that meet the criteria that we're looking for, the A+ rating, good Comdex rating. They have to have a premium finance dedicated team at the home office, and they have to understand the underwriting process, and they have to be comfortable with the product that they've either designed or that has the features and benefits in it. So there's a lot of different carriers, that out there that may say they're doing premium finance, but there's truly only a handful that are out there. So we shop them all. I mean, some of the carriers, Lincoln Financial, Minnesota Life. I don't want to leave anybody out there as good as National Life Group, Allianz. I mean, so there are carriers out there that do have that criteria. And when we actually take a case on, we look at how does it fit within all of those, or based on the client's goals, objectives, time frames, and so forth. So again, those are the carriers that are out there. Some of the ones that I just mentioned. There are others out there as well. But again, that could change. The dynamics are changing. We were just at a function where they're coming out with different products, and some carriers are now designing specific premium finance. Won't be ready until 2023. So we're not, we're always on top of it. We're always at these functions to where we're understanding from an actuarial point of view the design, when they're coming out, and then we analyze them to see if they're a good fit.
Right. And just to add to that, I think the point being, being independent and having no carrier bias, we're not going to pinhole or bottleneck the client into, one or two specific products. Every case is going to be unique, and there's going to be a different product that's going to best fit that client's unique scenario. And seeing as we're independent, have no bias, we're going to put the client in that best product for their specific scenario.
Absolutely.
And when you find a carrier, is there a checklist that you go through as a company that says, hey, this is exactly what we're looking for, and you fit or you do not fit to better help your clients in the end?
Absolutely, we do that. It's that checklist again. The Comdex rating, the AM Best rating. First of all, do you have a premium finance team that's dedicated? So we do have a checklist that we go down, that we sit, and we speak with the carriers. We fly out and we'll meet with the carriers. We want to see the team, meet the underwriters that are specialists in that area of underwriting with a high net worth clientele. So we definitely do very thorough analysis with each of those carriers.
And one of the things I like that you said also, Joe, is that when you're talking about these carriers, is that it's not a one size fits all. Not everybody's going to fit into the same system. And I like the fact that you can go out and shop different carriers and say, okay, your particular need is going to fit here and yours is going to fit here. Because I think what we do sometimes is we put everybody in the same group or the same room and say, okay, let's figure out how to make them all get out at the same time. But what you're saying is everybody's different. And that's what I appreciate in this space.
Yes. And you'll see that a lot with the carriers or people that are working for captive career companies that are still available. There's not many left there, but usually it's that one carrier, it's the product that they represent, and that's the only one that they actually present each time. So you got to be on the lookout for that type of thing. Good, you have flexibility to represent each carrier, and that's what we again do pride ourselves on.
Yes.
And that's that independency, right? That you're saying is that we have that chance to go shop all over to make it fit for the client.
That's correct.
100%. We have access to every carrier in the industry, and we're familiar with all of them, and we're on the front lines always. Any new releases, analyzing, studying the products. This is all we do, and so we are always at the forefront, making sure we know what's out there and who fits for that specific carrier or product.
All right. Well, let me ask you too, before I get into the next one, I do want to let all those with us live, if you do have a question, go ahead and put it in that comments, and we'll do our best to squeeze those in our other questions here as we continue to move forward. But as we're talking about the premium finance, what's a very special attribute that you look for when you're meeting with clients to make sure that they're going to be a good fit for what you're doing?
I think that what you're looking for, first of all, is an individual that meets the age requirements. And we usually start 30 to 60. I would say the sweet spot is somewhere 45 to 50 years of age. I mean, that's the real sweet spot because they gotta have wealth also, but they also have to have health. And a lot of the carriers are coming out just in 2022 here, limiting without exceptions, but they do have some exceptions that they will make occasionally that over 60. And certain carriers will go over 60, they'll go up to even age 70. We've seen carriers, depending upon if it's going to be for estate planning or if it's going to be used for income and retirement planning. And so, those are the things that we look for is, do you have the age? Do you have the wealth minimum $5 million net worth? Or we like to see $10 million. I mean, a lot of times, we like to see $20 million. The higher the net worth of the client, the better off we are, because then it provides, them the ability to probably have some liquidity, which is another part of using the collateral. And then they have to have the net worth, and then they have to have, skin in the game that they're doing. As Joe mentioned earlier in the presentation, they're contributing towards that interest. And sometimes it's an upfront, could be an upfront amount for the whole annual amount that's being financed each year, or it could be just an annual amount that's of lesser, but when you total it up, it could represent potentially, millions of dollars even.
All right. So one of the most important things with premium finance really is making sure that the client does fit that criteria up front. Because again, you'll see programs out there that may say, we can get you in if you're in your 70s or only with a $2 million net worth, but just because you can does not mean you should, especially with premium financing. So we really are not trying to get a square peg into a round hole. The client needs not only to be a fit, but they need to be a great fit as well. And which is why we do our homework and we really make sure that the client, number one, is of the proper fit, and number two, that they really understand the strategy before moving forward.
Right. And they need to understand leveraging too, CR. I mean, a client that doesn't understand leveraging or debt and building their business, it's really hard. So they could have the net worth, they could have the health, they could have the age that we're looking for, the income. But if they're not comfortable with leveraging and they can't get comfortable with it, and oftentimes we do, though, we're able to talk them through it and, get them to understand what it really is. And sometimes it sounds scary when you hear leveraging, if you're not used to it, but we actually will help the client understand that the leveraging and what it really means, and that makes a big difference too. So again, finding that right client is we're easy to tell you, let's walk away from it. It's not going to be a good fit, and it just doesn't work because of the dynamics.
And so I think with this, education is key. And one of the things I wanted to bring up from this as well is to talk about the webinar that you do with us. And so with our expert webinar series, I'll pop this up just for a moment so you can see this. So with our expert webinar series, it's hosted by Dave, and we have Tim and Joe, you both come on this with us. And the one we have coming up, just to put a little plug in there, is an attractive wealth strategy for high net worth individuals. And our next one is March 17th. And so with this one, I just wanted to put a plug in there because I know how important that education is, as you guys have both talked about, that you want to make sure you're getting the right fit, but making sure they have the right education as well.
That's correct.
Exactly.
Well, that's awesome. Well, let's keep moving on here. I've got a lot of questions that we still need to get to. Let's get to Dimitri. Is the interest paid tax deductible? And where's the term portion in this example?
The interest is not tax deductible. There are some ways, again, it has to be very careful in there, where some CPAs or accountants will say that they can deduct the interest if it's run through the business as a business expense. We shy away from that. So we don't want any gray area or anything that can be controversial. So we just simply only go with the program that know that the interest is not tax deductible. So you cannot deduct the taxes on that. And again, the portion of the term insurance, it was on illustration. When we ran the illustration, we blend term. We talk about that's a very important part of picking the right product as well, is it has to have the ability to blend the term. And when you do, it's built into that gross death benefit. The breakout of it is built in the illustration, which is anywhere between 40 to 50 pages. And it's broken down in there how much of it is term insurance as far as term blend and how much of it is the base coverage. So that's all broken down in the illustrations that we can sit with and on a case by case. But there's no real formula that we use there. We just look at where does it work the best and in the best interest of the client with what they're trying to accomplish. But it's in each of the illustrations broken out. Yeah.
And with each of these, so we may pull questions like we have from the webinar. So you'll see as we talk about these particular examples, as you're referring to, Tim, is that this came from the webinar. So if you didn't get a chance to watch that webinar again, you can see that on March 17th. And you just go to retirementriskadvisors.com and click on CPE webinars, and you'll be able to find the details there, as that does qualify for CPE. Joe, you have a pretty good history. I think you say 8 years. You were kind of in that illustration area before you came over. Talk a little bit about that process and what it's like.
Yeah, so building a program from the ground up, there is a lot that goes into it. There's a lot of complex work that happens behind the scene. But, it all starts with, number one, the analysis. Again, you want to make sure you're with a good carrier. And number two, you want to make sure you have a good product. And finding a combination of those two, even with all the carriers out there, there's really only, at any given time, there's a small handful where both of those are a good fit. So first, what we're going to do is we're going to analyze the product. We're going to make sure, is this geared more towards estate planning? Is this geared maybe more towards supplemental retirement income? And really, what are the mechanics of the product, and does it fit for premium financing? Because again, if you go and watch the recording of the webinar, we talk about what we look for in product, and what we really want to make sure is that there are as little moving parts as possible. We want to make sure that there are features that we can account for now, and we know they're not going to change 20, 30 years in the future. So we want to make sure we have that right product and right carrier fit. And then the second portion, again, we want to make sure we have the right banking relationships. You can't just go to, your local branch and get them to fund one of these policies. You really need a specialized bank or lender who has a dedicated team where this is all they do 24/7. So when you go and you find that right banking or lending relationship as well, and then making sure they have a relationship with the carrier as well, because these banks and these carriers need to talk to each other and have good lines of communication as well. Because again, we are showing 10 years of premiums, generally speaking, going into these policies. And so each year they're going to need to communicate with each other as well. So finding all of that synergy and putting it all together and putting together a program where, we go into the stress testing of everything and we make sure that the design really is sound in principle and the math behind everything checks out. Really, it sounds simple on paper, which is why there are a lot of people who, out there who say they can do it right now, but there really is months of work that goes in beforehand before you have an actual working model.
Oh, I definitely appreciate that. Oh, go ahead. Were you going to say something, Tim?
Yeah, and even with that, you know, you look at the output and you don't realize what goes on behind the scenes on a day-to-day basis with Joe and his team, you know, working on this. Just an illustration that comes out 2 pages. So you see 2 pages and you go, wow, we can do that. And you got to go, well, they don't realize that it takes hours of work, and sometimes getting together in the boardroom and trying to figure out, well, what's the proper blend or the proper, you know, amount of coverage that's really needed to accomplish the goal that the client wants, whether it's an income or an estate planning play. So there's, again, that looking at the paper, the finished product is a lot. That's why we're totally dedicated to this business. This is what we do. We eat it and breathe it every single day, and have been doing so for years.
Love it. All right. Well, we're getting close to being out of time. Let's see if we can squeeze in maybe 1 or 2 more questions. Let's get the one here from Jim. If the policy is in an irrevocable life insurance trust, how does the principal get $500,000 per year?
Okay. So again, in the previous webinar, we were showing premium finance being used for supplemental retirement income, and that amount was $500,000 tax-free. Now, again, before I answer the question directly, I want to say that this kind of goes towards where we position ourselves as far as being a part of the client's financial team. So again, when we're putting together these ILETs, or if we're just doing trust work, we're working as a member of the client's financial team, and we're working alongside their estate planning attorney. So we don't do legal work, we don't give legal advice, but we work alongside them, and we let them take the lead on developing the trust, while we work with them. And again, every client is going to be different. There's not one cookie cutter strategy for this. But generally speaking, the 30,000 foot overview is that a SLAT is created. So spousal lifetime access trust. And inside of that trust, there is going to be a provision for income. And what that provision says is that you can take a distribution from the trust as long as it's used for, the acronym is HEMS. So health, education, maintenance, and support. So you can take income out of the trust for those 4 things. And basically all that's saying is that you can take an income stream from the trust as long as it's not extravagant. So what they're going to do is, let's say your lifestyle income up until now, until you want to take a distribution from the trust, is you lived off of $250,000 a year. So you want to make sure that the amount coming out of the trust is right in the range of that $250,000. If you were at $250,000 and all of a sudden you go to take $1 million out, you can't do that because it's considered extravagant. So it needs to be in line with where lifestyle has been at for the past, decade or so. And again, that is just a 30,000 foot view. Each one is going to be very specific, and we work alongside the estate planning attorney.
All right. So in this example, like the 500, that could be somebody that's accustomed to a $2 million a year lifestyle income. So to be able to take 500,000 out, 25% of their lifestyle income that they've been accustomed to would be seen reasonable.
Right. Again, what this strategy is geared for, high net worth individuals, $500,000 per year as a percentage of their total lifestyle income is well in line.
Right.
And I really love the fact that you brought up, Joe, is that you partner with the finance team. I think that is incredible. I think a lot of times other companies tend to shy away from that, but you directly are head on with it and you work together. And I think that's extremely a great opportunity.
Right. I mean, that's exactly what we do. We like to position ourselves as we work alongside everyone. And with our business model, this is all we do. So there's really, no threat to the financial advisor because we're not trying to gather assets. There's no threat to the CPA because we're not trying to do tax work, legal work, anything like that. So really, we come together as a team, and we like the synergy of everyone working together, all in the best client's interest. We find that's always that's always best for the client. And so, that's how we position ourselves, and, creating those synergies really are beneficial to the client.
And I definitely appreciate that. Go ahead, Tim.
And it's interesting too, because a lot of the times when we sit down and meet with a client for the first time, a lot of them are business owners, and we say, when is the last time have you gotten in the room all together your financial advisor, your CPA, your attorney, and anyone that gives you advice or that you bounce things off of when you're making a decision. And everybody's sitting in the room together working towards those goals and objectives, and we all know what our role is within trying to help you do that. It's amazing how they've never done that, and it's like a light bulb goes off, and they go, "We've never done that. What a great idea!" And then we say, "Well, that's what we do all the time. We want to get everybody together to make sure we're planning in the right direction."
And I love that. I think it's a great ending point. I think that's the one thing is that as you talk about here with the premium finance is exactly what you said. It's just getting everybody together. Before we go, Joe and Tim, I'd love to get maybe your final thoughts of those maybe who are watching, but saying, yeah, this is definitely something I'm interested in, or I have a few clients that are interested. What's a piece of advice we can leave for them?
Well, I think the thing is, reach out to us. If you have a question or you have someone that we could talk, again, offline, so to speak, that we'll analyze that. We'll let you know if it's something that we think that, if you have a client that's a good fit. If you have just wanting more information, reach out to us and talk to us. We'll let you know if it's something that we think that you could be doing or should be doing. And who to look out for, whatever it is that you have, and anything to do with premium finance, we're gonna get the answers and have the answers for you. So I just think just reach out to us. And what else you want to add?
What I always like to say is with premium finance and every case being unique and specific, we can talk about it conceptually, theoretically all we want. The best way to learn how premium finance actually works in the field is to get a live case study to go, because no two cases are going to be the same. So even if it's a hypothetical, reach out, let us put it together for you. And really that's the best way to learn how it's done. It's just like, playing a sport or riding a bike or anything else. Just get your reps in, and that's how you learn how to do it. And we're more than happy to walk you through the process, do all the fact finding with you, and just, get a couple of live case studies going, and it's the best way to learn.
Yep, absolutely.
And if you were part of the webinar, I'm going to go ahead and put in the chat right now a link that we put at the end of the presentation, where you can go ahead to this link here on the Retirement Risk Advisors page, and you can fill out a form and be directly connected to their calendar. So if that's something you're interested in, go ahead and fill that out and get scheduled on the calendar so they can have that chance to sit down, even if they want to just chat about it or to go through and see if they have a case or something that they want to have a second set of eyes on. I would encourage you to sign up for that. And again, thank you so much, everyone, for being here with us live. It's been an honor to have you, Joe and Tim, with us talking about the premium finance. And I do want to also just, again, talk about the different opportunities we have. So our next webinar we have, in case you haven't seen one yet, is coming on March 17th, an attractive wealth strategy for high net worth individuals. Both Joe and Tim will be teaching this course, and we'd love to have you as our guest. And again, you can go to retirementriskadvisors.com and click on the CPE webinar tab at the top, and that'll give you a link to it. Joe and Tim, thank you so much for being here today.
Yes, thank you for having us.
Thanks so much for having us, CR. We appreciate it.
Yeah, and for everyone else, again, we're always here every Wednesday, 11 a.m. Central Time, always talking about retirement, because our goal is to help you not only get to retirement, but get through retirement. Thanks for being here. We'll see you guys again next week.
Thanks so much, everybody.